Tuesday morning, November 8th, Stan Ehrlich Market Analysis. Good morning, 10:30 California time. Still has about 2.5 hours to go, and we are dropping like a rock in the last 10 or 15 minutes from 385 to 380, below 382. That's a very fast, sharp decline on the S&P 500. The daily data chart looks like this, and I always start out with daily data. And by the way, soon I'll be using Ninja Trader charts for the YouTube market analysis discussions. We rallied for the last 3 days, including today, off of a test of support, which was the neckline on the head and shoulder bottom that formed during October. The last shoulder was a little closer in time than I would have expected by about 3 days, but it's there. Market came up to the neckline the next day, gapped above it, tested the neckline, rallied, closed strongly. A couple days up, a little bouncing around, and now, late last week, we have a move down to the neckline, closing above it. And the next day's low is on the neckline, basically, closing strong. And then yesterday, strong. And today, well, we were stronger, but we're only up 175 at the moment. And again, that is a pretty sharp, fast break here this morning. And it looks like it was probably some new news, but that usually has a reaction immediately and much stronger instead of waiting around for a while. This looks like a test of resistance it couldn't break through and dropped off. But I'm not sure why that particular price level would be so important. If you go back to the dailies, around today's high, you got not a lot to work with here recently. I'm still, if the pattern works out correctly, bullish to 403 up here. Here's the minimum upside objective having been measured on the breakout day. And there's a possibility of 410. This is going to take another 2 to 4 weeks. If this turn up late last week, Thursday last week, is legitimate, and we do not start closing below that blue neckline, slightly downward slanted neckline. So far, the pattern's working fine. We got our October low, fantastic. I screamed bloody murder the day it was happening. October 13th, gigantic ER signal. The kind you love. It's at the bottom of a major move down and maybe the beginning of a major move up. We've only had about 3 weeks, so ask me in 2 or 3 months. Okay, I want to bring into the picture the Santa Claus rally since I'm going out another couple of months. We have an exact formula for the exact Santa Claus rally we've been looking at, analyzing for many years now. And I've been tracking it for probably between 10 and 20 years. And I'll give you the details in the next weeks to come before Christmas, of course. And that is basically buying just before Christmas and selling out at the early part of January. You're holding it about 2 weeks, a week and a half. Has a fantastic track record. I'll be talking about it much, much more. And again, this is just before Christmas for buying and early in January for selling. Next, the Dow Jones has actually made the DIA a new high for the trend, up recently since October. It's not waiting around. This thing is now overbought the way it was a week ago. And we ended up with a couple of major bearish engulfings, sell signals that only worked for a day or so. It did not come down and close the gap like I thought it was going to at 311.5. That gap is still there, not to be forgotten completely. This market needs to close on a strong note today, otherwise being overbought. Trying to close a very old gap that was from August 19th to August 22nd over a weekend. That gap is not closed, and today's high is at the beginning of it, the bottom of it, very accurately so. That's what's causing some problems here. And it's around a resistance level as well that I've had drawn on this chart for a long, long time. Okay. I would not be a buyer simply because we got overbought and the DIA and the other indexes are not that high, but they're showing some problems in the last 30 minutes. If we close lower today than yesterday's close, especially in the DIA, that could develop into something significant for a few days on the downside, but that hasn't happened yet. Don't jump the gun. Be a little patient. Next chart, QQQ. It's the slowest going up, has gained the least, and has the most problems. It used to have a head and shoulder bottom, but for 3 days, we closed below or traded 100% below the neckline, and that's not great. That is not part of the way that pattern should be acting, and so I have erased the markings for the shoulder and the October 13, which is a bullish engulfing. That's good. It used to be the head of the head and shoulder bottom, but not anymore. It just stands out as an individual bullish reversal, which is still good. And I do think this has a significant amount of rally potential, just like the S&P from where it is. And I can't quite figure out what the DIA might be able to do on the upside yet. So that's the stock market indexes. We did find a minor home for low after getting down to 4 on the 1-minute RSI, extreme low. So I'm thinking that we have a low for a little while, not necessarily for the remainder of the day. This has done some damage. This quick, fast break here has to come back pretty good and close on a fairly strong note in order to be all right. Okay, let's go to futures. Whoop, I'm going to skip futures today. My mistake. I'm not finding anything that's causing me some interest at the moment, so we're going to go right to forex. We've got the dollar index having a bearish engulfing a few days ago. I'm sorry, a couple of weeks ago. And you can see I put a circle around the red bearish engulfing overbought condition, and we do use a customized relative strength index. It's not exactly the same as Wells Wilder's original RSI. We look back different periods, we draw different lines, we have different overbought levels, and we do different things when the market gets in those conditions. So far, that is the top of the dollar index, and we have a new low and a new low close possible today. Great signal so far. Euro dollar. I have to say the same thing on the reverse. We've got an excellent buy signal in the euro dollar on September 28th. And we almost have a new high or a new high close for the euro dollar since that bullish engulfing ER buy signal. How about the dollar yen forex? Bear signal smack dab on top. What can I say? Almost a new low close as well for that sell signal on the dollar yen. How about the pound dollar? Great British pound and the US dollar. We had almost at the very bottom, which was oversold, nowhere to go short. 2 days after that, we had a bullish engulfing, and it qualifies for an ER buy signal. And again, we are almost a new high ground since that September 28th buy signal. That's great. Let's go to the Aussie dollar, AUD USD. On the bottom, we got a bullish buy signal. Exactly. Same story here. The dollar is getting quite weak today. May have something to do with the market turning to some degree in the last half an hour or so as well. How about the Canadian, US against the Canadian? Well, smack on top, and I'm not rigging this. Smack on top, we got a bearish engulfing ER sell signal. We have a new low, and we have a likely new low close below all other lows today if we stay anywhere near where we are right now. US against the Swiss franc. Here we've got a recent low that was great, but it was September 13th and allowed for a damn good rally for several weeks. Just immediately before that, a few days, we got a bearish engulfing, and it went straight down. Hey, can't get much better than those two. Some bullish in here and a small bounce, not particularly great. An excellent buy signal here. A minor profit on a sell signal here, and one bad sell signal. And we are looking at approximately 1 year of historical data. US dollar against the Swiss franc. Likes my trading system, apparently. Euro against the pound. Overbought at the top, but we didn't get a bearish signal. We got a bullish one back here, March 7th. Produced a nice bull move, wasn't very huge, sizable, but it was there. We got a couple sell signals. A couple of them are good on the way for a minor correction, but nothing lately. I'm going to skip the other forex symbols. We'll talk about them tomorrow. Let's go to sectors real quick. These are symbols which represent groups of stocks. This one is the banking sector, the S&P banking ETF. We got a buy signal around the low of the first of a double bottom formation. So that one's working out okay. I've seen better. SMH, oh, there's one better. Was a smack dab on the bottom of that break, and we had a complementary buy signal 2 days later. New high closed since the buy signal. What can I say? A lot of things are doing something particularly profound today. That's interesting. Buy signal on the bottom, rallying nicely after a downside correction. Looks like we're ready for a new high for the trend here. XLK. Now XLU did not quite have a bullish engulfing at the bottom, so we don't have a buy signal, unfortunately. We did have a great sell signal on top. The first high of a double top formation that was outstanding. Nothing lately. XLY, bullish on the bottom, engulfing the low day. Also a test of historical support. So now there's a broad, very broad, June through October, double bottom formation on the charts. And we look like it's a low risk, long position. And I'm expecting it to make new highs for the last couple of months soon. All right, ITB. We have a sell signal on top, but that was a long time ago. But it is the top of the bull market, the beginning of the bear market. And that's exactly what my trading system, the ER signal, is built for. It tries to pick the important turning points for significant trend changes. Frequently, it picks small trend changes that may only last several days. And of course, often enough, it's wrong completely, but we never take large losses. We always have a relatively close protective stop or stop loss. I like the phrase protective stop. And never are we ever in a trade without a protective stop. I'm going to leave you with that, except that I haven't touched on cycles or cyclicality, which I'm known for back in the 1970s, 80s, and 90s, the Ehrlich Cycle Finder. Still available. And the Foundation for the Study of Cycles, you should check out. They've got great material. If you're interested at all in cycles, not necessarily, but they do have plenty of material on economic cycles, price cycles, but cycles of all different types. The Foundation for the Study of Cycles. You have a great day. Talk to you tomorrow.